Last week, market participants were discouraged by Jerome Powell's testimony at the Senate, as he sounded less hawkish and more cautious than expected, so investors downgraded expectations of monetary tightening to 3 rate hikes this year. They predict the first rate hike not until March. Currently, traders are shifting focus towards the Bank of England. The regulator is likely to venture into another rate hike in February. Are there any grounds for such conclusions? And what other events are due in the second half of this week? Let's talk about it in the video calendar on InstaForex TV channel. On Tuesday, market participants will get to know the policy update of the Bank of Japan. Interestingly, today the People's Bank of China unexpectedly decided to lower the key policy rate for the first time since April 2020 in an effort to prop up the domestic economy. Unlike the Chinese regulator, the Bank of Japan will hardly take such drastic measures, and interest rates are unlikely to change. In the previous policy meeting, Japan's monetary authorities decided to scale back corporate debt buying to the pre-pandemic levels. Besides, the central bank made the remark that it would take extra moves to soften monetary policy promptly, if necessary. Such prospects certainly do not benefit the Japanese yen. Nevertheless, we should not forget that the yen's forex rate frequently depends on market sentiment, but not on Japan's economic conditions. The yen is the safest asset, rising in value in times of geopolitical tensions, challenges to global immunity, and a downturn in the global economy. And when it comes to actual monetary tightening, the Bank of England is the only one to increase its key policy rate at the final meeting in December. On Tuesday, investors will discover fresh evidence that the British economy is ready for another round of monetary tightening. In the red-hot claimant count change, the number of unemployed Britons is expected to go down by 38,600 in December. The report has been logging the contraction of jobless people for 10 months straight. It proves a steady recovery in the British labour market following the crisis. This is bullish for the pound sterling. And the currency market could see the euro growing against the US dollar as well. Analysts at the ZEF Institute for Economic Research will unveil the Economic Sentiment Index to judge the business climate in Germany. The index for January should encourage investors, as the reading is projected to jump to 32.1 points. It's the highest level in 4 months. This metric remains at low levels, but nevertheless slightly more optimistic morale among entrepreneurs in the largest European economy should support the single European currency. And on Wednesday, market participants are alert to a series of macroeconomic data from the United Kingdom. Inflation data is of major importance. The previous report recorded the fastest inflation growth since December 2011. The main culprit of the sharp inflation acceleration is elevated energy prices. Consumer prices in the UK could have climbed even higher in December to 5.2% in annual terms. It will be another strong argument for the Bank of England to resort to the second rate hike. The pound sterling is set to extend its growth despite being overbought. Canada is also due to report on its consumer inflation, which has been accelerating its pace of growth. An annual CPI rate could have edged up to 4.8% in December, and this will also assure the Bank of Canada to take drastic measures. The pound sterling is in the spotlight this week. On Wednesday evening, the Treasury's Select Committee is holding hearings, so the Bank of England's policymakers will report on their work. Market participants are interested in the answers to questions of MPs because traders will be looking for clues to a further course of monetary policy. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.